Today's day number 7070 of the $1,000 account challenge, and we are up a whopping $28.50 in the account, or 0.24% of the total portfolio balance. What happened today was I wound up taking a winning trade and a losing trade, and those two trades offset, and this is the remainder. Could have been a $400 day turned into a $30 day because I failed to do one thing, and that one thing: take the profits when they were offered. Straight off the day trade watch list, we had AMD as a short idea below $166. Now, I took the entry on AMD short prior to a break of 166 because it was a gap down day. And on gap down days, what we usually look for are opening rallies that get sold. So I took an entry short at $169, thinking that this opening rally right here was getting sold or was going to get sold, and I was going to be able to profit on this. How would I have known to take my entry short at $169? Well, let me teach you. It's a strategy or an indicator, I suppose, known as the Fibonacci Retracements tool. So you draw a trend line from the start of the retracement, which was the previous day's closing price, down to the peak of the move, which in this case is going to be your pre-market lows. What this gives you are potential rally points on the chart itself. So you have a 23.6% rally mark, a 50% rally mark, a 61.8 rally mark, 78.6 rally mark, and then eventually your 100% rally mark where the move has fully retraced. This can be super accurate if drawn correctly. And look at where AMD did rally to. Hits 23.6 and rejects right here. Hits 50% and rejects right here. Hits 61.8 and rejects right there two times. And then hits 78.6 and rejects right there. Usually you will not have a full retracement all the way up to 100% unless it's some type of V-shape reversal. So how did I know not to take my entry at the 50% retracement line? Well, look at the magnitude of this drop. That is a big gap down on AMD. So usually the larger the gap down, the larger the rally or retracement will be. Plus, this 50% retracement line was hit within the first 5 minutes, and my rules state that I do not trade in the first 5 minutes. So that prevented me from taking the short entry here and looking for the move lower. Now, I was telling the team we were trading live today that I was looking for a rally up close to $169 to take the entry short on AMD, and we got that move on this big green candle right here. So it may look like, without the fib retracements there, it may look like I'm just taking a short entry on a big green candle just because, right? But I do have a plan with this trade. I do have a potential resistance point with this trade that's at $169, and I know that because of the Fibonacci retracement line, 61.8, that's going to be your golden ratio, okay? So we get the entry short on AMD on this green candle right here, and we are red on the trade almost right away, but we're not sweating it because it's still below 169, and then we're green on the trade, big green right away. We're up 10%, we're up 15%. I saw it top out up 17% on this trade, and I did not take the profits because I was just looking for that 20% mark. This is where I personally failed today by not taking the profits here when they were offered, because this would have been a $400 day had I just taken the profits. Might have even been more than that. Or what I could have done is set a hard stop, which I didn't do that either. Because when this retraced, I could have stopped out at 10%. I could have stopped out at break even. I could have stopped out at a negative 10%. Instead, I let this go to almost a 15% loss before I got out of this trade. And that cost me, and look, at the very next candle drops right back down, and we were offered 20% on this. So the main takeaway from this trade is not that it was, me failing to take my profits when they were offered. The main takeaway is how I knew where to take the short entry given the gap down today, and that is all based around using those Fibonacci retracement lines accurately. So that was the AMD trade. Could have been a winner, wound up being a loser. It is what it is. The next trade was on Apple, straight off the day trade watch list. This is very cut and dry. It was a short idea below $168. So we do get the break of 168 right here. We get the higher volume down, and I do great on this trade. Awesome execution. We get the rally up. I take the entry short. I add to the position short as this moves higher, and then we enter into a phase of consolidation. Now, this is kind of where this trade went sour for me, because I was initially looking for the 20% gain, which would have put me green on the day by about $200 or $300, right? But because of theta, because of time decay, and because of this consolidation, I wound up not getting 20% on this trade, and instead I took about a 10% gain. So let me show you what happened here. All of this consolidation is decaying my premium at an exponential rate. So the longer that I stay in this trade, the more money that I'm technically losing. And right here, we were up 10% on the trade, and we get a move down to the low of day over here just 4 minutes later, and I'm still only up 10% on this trade. So that's showing you how quickly the theta is decaying my premium on the contracts. So when I see that happen, when we get this low of day move, and I'm like, we were just up 10% and we're still only up 10% right here, I'm like, no, I'm taking the profits on this, because my fear was Apple was so extended, right? It's a gap down on top of an opening drop, on top of a break of support that dropped even further, that's still dropping. It's just extension on top of extension on top of extension. My fear was Apple's going to reverse because it's already extended so far, and we're just not going to get that 20% profit that we're looking for, because this is not dropping fast enough and it's not dropping strong enough. That was the right choice to make, to take those profits. Even though it was only 10%, it was the right choice to make, to take those profits here, because look what happens next. Apple does reverse and runs back up to reclaim $168. So had we not taken the profits here, this would have wound up being either a break-even trade or possibly a losing trade if we held on to it even longer. So just very cut and dry on Apple. It's a very simple trade, if you will. It's break of the trigger level, rally up, retest, take the short entry, and get the move lower. The main thing I wanted to review with this video is, number one, take the profits when they're offered, okay? Because a $400 day versus a $30 day is a big difference. And number two, how I used those Fibonacci retracement lines to identify where to take the entry short on AMD. And always remember, the bigger the initial move is, whether that's up or down, the bigger that your retracement or dip will be on the backside, on the reverse side of that initial move. Take care. Thank you so much for your time, for watching this video. I hope the video has helped you out. Press that like button for me if it has, and consider subscribing to the YouTube channel as well. It's just the best way to support me and this type of work that I do, and it is free. I will see you tomorrow when we continue the $1,000 account challenge, and thank you so much for watching. Cheers.